What's up, everybody? My name is Joseph Jesse. I'm here with Tim Lucas.
Hi, everybody.
We're here with the Mortgage Reports talking about mortgage rates. Now, someone like me, let's say I'm in a position to purchase my first home, I'm probably going to do the process backwards. I'm going to go from finding the dream home that I want, finding an agent in that area who can help me get the home that I want, and then, I got to figure out what I'm going to do with the money.
Mm-hmm.
So when you start looking at mortgages and mortgage rates, they go up and down like every day.
Mm-hmm.
You know what I mean? A lot of people probably feel like it's trying to hit like a moving target or like catch a chicken or something. It's
Right.
just up and down,
Exactly.
up and down. You don't necessarily know when to jump in and try to lock in a rate. Can you talk a little bit about what causes these numbers to go up and down so often?
Yeah, mortgage rates are just like any other financial market. So I think maybe the market that we're most familiar with is the stock market. So
Okay.
Let's say the Dow Jones or whatever. You hear a news headline, the Dow Jones hit 24,000 today. It was at 23,800 yesterday. What happened? I guess that's a good way to think about it, because the stock market doesn't just stay steady for a week or a month at a time. It's changing not only daily, but every minute of the day. And so that's kind of like mortgage rates, because mortgage rates aren't set by the Fed or any other government organization. They're actually set by traders, almost like day traders, right?
Okay.
Like investors out there that are buying and selling securities. And so they're always analyzing, hey, are mortgage-backed securities a good deal today? Do we think they're going to be a good deal 6 months from now, a year from now? And we can talk a little bit more about what mortgage-backed securities are.
Okay.
But those are the drivers of mortgage rates, not necessarily like bond prices or anything like that. But
So if it's kind of like day traders are in control of the rates, I'm sure things going on kind of in like everyday news could probably affect their, I guess, prediction of what rates could be, right? Like
Exactly.
what could happen in the news that could affect rates?
I think the biggest thing that we're all really familiar with is a presidential election at the end of 2016 is just like the perfect example.
Yeah, I heard that was kind of a big thing.
Yeah, it was a kind of a big deal, super unexpected, and so anytime there's any kind of big unexpected news, you can guess that mortgage rates are going to change pretty dramatically. So what happened at that point was Trump got elected.
Mm-hmm.
It was kind of unexpected. Nobody really saw it coming.
True.
And so at first, I remember like late that night after it was kind of like a sure thing that Trump was going to get in. The stock market really tanked, and what we thought was going to happen was that rates were going to improve, because whenever the economy looks like it's going to go downhill, that's when mortgage rates improve.
Okay.
It's kind of weird. But what happened instead is that traders they decided that Trump would be good for the economy, and so the stock market started skyrocketing right after that. And what happened also was that mortgage rates went up, because whenever the economy is doing well, or there's inflationary pressures on the economy, which we can talk about more as well, that means that mortgage rates are probably on their way up.
People are scared, thinking rates are going to go down. Rates don't go down.
Mm-hmm.
Economy's doing good, thinking rates are going to go down. Rates actually go up.
Mm-hmm.
Why is that? You would think that it would be the opposite, right? Like economy sucks, rates go down, right? Along with it.
Yeah. So there's a couple different ways that a good economy changes mortgage rates and makes them go higher. So first of all, it's because of other investments that pay more. So mortgage-backed securities, which are the kind of financial instruments that drive mortgage rates, are actually viewed as like a safe investment. So let's say you just want to stockpile your money. It's basically like mattress money, right?
Okay.
If the economy is doing bad, you don't want to go throw all your money into the stock market, because the stock market could lose 75% tomorrow, right?
Yeah.
And all your money that you've worked so hard for is gone, right? So if you're just regular Joe Blow on the street, you're going to stick that money under the mattress before you stick it in the stock market, right? So investors are the same way. If they don't want to lose a ton of money because the economy is doing bad, they're not going to put their money into stocks. They're going to put it into bonds, and a type of bond is a mortgage-backed security. And what that is just like a bond that kind of groups a bunch of mortgages together. It's pretty safe. It kind of pays a certain amount of interest every month or year, and it's a way that investors are pretty assured that they're not going to lose money if they invest in those. And so how that kind of affects rates is the demand for those mortgage-backed securities makes rates go up or down.
So pretty much when you're shopping for a home, you're always at risk for the rates jumping up and down, right? There's no kind of like, this is the right hour of a Tuesday on the third week of December to purchase a home.
Right, it's pretty tough. We do actually on the mortgage reports, we do have an article about what's the best day to lock in a rate, and that's just like looking at averages over the time over a certain time. But really, anything could happen on any given day that could change rates. Right now they're talking a lot about tax reform in Congress, and so anything like that where there's a major implication for the U.S. economy could change rates, and there's really like no way to protect yourself against that until you lock in your rate. And so what you could do is you need to find a home first, because lenders aren't gonna lock in the rate without a property address. But once you have the property, you can lock in the rate, and that's going to keep your rate stable until you close on your home, as long as you lock in for the right amount of time.
I'm going to talk a little bit more about locking in a rate. Is that kind of the best way for home buyers to protect themselves from rising rates?
Yeah, unfortunately you can't do it, like I said, before you have a property. So like you could be shopping for a home, you're like, oh, I'm kind of in the market for like a $250,000 home or whatever the case is. Now if rates go up a lot for some reason, then you might be priced out of that home just because your monthly payment's going to go up above what you can afford or qualify for. But let's say you do find a home, you don't want to really play the market and say, oh, I think rates are going to go down. You want to lock in as soon as you have that home, and your closing date, which comes like after you have the fully signed around purchase and sale agreement, and both buyer and seller agree to the purchase closing date.
So it sounds like it's just a game of double dutch. You have to figure out the right time to jump in and start playing the game, people. My name is Joseph Jesse. Tim Lucas. This is the Mortgage Reports, giving you a breakdown of mortgage rates and what's really going on with that and how it all works. Tune in next time for our next video. We don't know which video we're going to do, but it's going to be something about mortgages. It's going to be something about how you can position yourself to purchase a home, and it's going to be done in a way that's informative and not super duper dry. Our job here at the Mortgage Reports is to present information to you like this in a way that's easy to absorb, and hopefully a way that you can present it out to other people. A lot of millennials are in a position to purchase their first home, and we want to present the information to you that's going to help you get more home for what it actually is that you qualify for. So tune into the Mortgage Reports. Check out our YouTube channel. We're on Instagram, Facebook, Twitter, and we're also online, www.themortgagereports.com. Tons of great information we're posting daily. So again, Joseph Jesse, Tim Lucas, this is the Mortgage Reports. We're out.
Later, guys.